It's time for Yahoo Finance's Market Minute. Stocks are mixed as Nvidia's decline weighs on the S&P and the NASDAQ. Speaking of Nvidia, shares are down over 3%, pairing gains it saw in pre-market trading. Analysts raising concerns about Nvidia's gross margins outlook. Meanwhile, CEO Jensen Huang touts strong demand for its Blackwell chip. Investors are optimistic about Snowflake's AI adoption outlook, rewarding that stock with a nearly 10% boost today. Software company projecting better than expected revenue growth for 2026, signaling growing demand for its AI products. And Salesforce edging lower after issuing a disappointing outlook for the year. Its new AI product, dubbed Agentforce, is expected to make only a modest contribution to revenue. That's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, the tools, the tips, and the tricks that you need to grow your money. And on today's show, Nvidia's quarterly results. We're tracking Nvidia's performance through a technical and fundamental lens to evaluate what you should do with the stock. And your new iPhone, is that screen cracked or the battery dead? Well, guess what? I'll be joined by Yahoo Finance's tech editor, Dan Howley, who will give his review of the new budget-friendly Apple iPhone 16e. Plus, getting retirement ready. All week long, we're taking a look at how to best invest for retirement at every age, from workers in their 20s maxing out their 401k match to those over 70 living off of their investments. And today we focus on your late 60s. We'll discuss the financial checklist that you need to make before you retire. All that and much more during today's show. But first, our top story of the day, shares of Nvidia under a bit of pressure despite beating analysts' expectations on the top and bottom line. We're going to zoom out and take a look at the stock on a technical level to determine whether or not it's a good investment for your portfolio on the pullback that we've seen here. Joining me now, we've got our markets and data editor and host of Stocks in Translation, Jared Blikre. Jared, what is the technical analysis telling us?
Let us start with the definition. Technical analysis is a method of evaluating and forecasting future price movements of securities by analyzing historical price data and volume data. Now, this it relies on charts and other tools to identify patterns and trends that can indicate future behavior. And let's take a look at a chart I have here. This is Nvidia going back 2 years. You might be able to see these little green dots. Those are earnings announcements. And one of the things we've seen with Nvidia is that it can catalyze price up or down. And today it happens to be to the downside, but there were various times, and it's hard to see, but there were some times when it catalyzed price action movement to the upside. And in fact, before yesterday, the prior earnings reaction was a brief foray into new highs after being reversed. And then we saw this technical pattern here. So let me get to one of the forms of technical analysis, which is pattern recognition. I'm going to draw a trend line in here. This is still intact. And we also have a broadening megaphone. And this is a pattern where you see increased volatility and uncertainty. Bottom line is that we're seeing more indecision. Now I'm going to add another layer. This is a moving average. This is a 200-day moving average. And if I extended this chart to the left like 10, 20 years, you would see that the 200-day is a very good capturing device of the predominant trend. What you'll also notice here is we just broke below it, a little whoops moment in the recent past. And today we are bouncing off of it again. So suffice to say, Nvidia is at a decision point. So that was the 200-day. I'm also going to introduce the 5 DMA, and that's a 5-day moving average. We can use the 20, we can use the 50. The 5 I like. This is because of Brian Shannon. He wants to see price above it if he's going to initiate a long swing position that's holding for a few days, a few weeks, maybe in a few months. But that is something that we're not seeing today. So the long-term trend is up, the short-term trend is down, and so we need to make a decision. And guess what? RSI can help us do that. That is relative strength index. The squiggly line down here goes from 0 to 100, and then we have overbought and oversold areas, which is above 70 and below 30. What I notice here is that we have not been in an overbought or an oversold status since June of last year. This is no man's land. This is indecision land. So more heightened uncertainty, and that's what I'm getting from this chart. Now you put it all together, if I'm going to get long, I would want to see across over this 5 25-day moving average. That would bring it in line, the short-term trend in line with the longer-term trend. Ideally, though, I would like to see a little washout of the week longs, and so maybe we dip below the 200-day a little bit, and then we quickly reverse to the upside. That's a pretty strong buy signal right there. If we just get back to the record highs here and are able to extend beyond it, that's also a long signal, but then you have a wider stop, or it's more difficult for risk management at that point. So the bottom line is today we're kind of at a decision point below the 200-day moving average. If we close there for a few days, this rally is in serious jeopardy. Back to you.
Jared, thanks so much. And you can catch more of Jared on Stocks in Translation every Tuesday and Thursday, 8:30 a.m. Eastern Time on Yahoo Finance or wherever you get your podcasts. Nvidia under some pressure here, despite that upbeat earnings and the outlook for its first quarter margin did miss estimates. That's coming into focus, and we want to look at the stock's performance using some of the fundamentals as well here. Whereas technicals focus on timing and analyzing price movements to time market decisions, fundamentals, they focus on value and assess a company's financial health through earnings and revenue. Here to help me do just this, we've got on set Jay Woods, Chief Global Strategist at Freedom Capital Markets here. So Jay, there are three fundamentals that you're looking at around Nvidia. What are they?
Well, first was the earnings overall, but we look under the hood, we look at that revenue beat, which was good. They consistently beat on revenue, and we look at the chip, the Blackwell chip. People were concerned, is the demand still there? Jensen addressed that. The demand is still there. There were no snafus as far as deliveries go. So we checked that box, revenue beat, Blackwell, things, looking good. So that was optimistic. The DeepSeek question. DeepSeek is the one question on everybody's mind. This is what drove the stock price down late January, early February to that 113 low. Is this competition good? Is it going to hurt their growth going forward? Jensen welcomed it. Did that resonate with investors? It doesn't look like it's eased anyone's concerns that this competition will be good. How is that China trade going to be going forward? But Jensen didn't say this was going to hurt them. He welcomes the competition, and he doesn't see it being a headwind. And then lastly was, that CapEx spending from its biggest, users of the platform, the Amazons, the Googles, the Metas. There hasn't been a slowdown. We saw that with their numbers. The projections, though, the guidance going forward, that has been the bugaboo for not just tech stocks, but all stocks. You look at Walmart. They had a blowout quarter. They guided a little lower. Nvidia, we're used to blowout quarters. We got it. This was fantastic. Was it as big? It was the worst revenue beat in 2 years, but they beat. And the guidance was solid. But what is hanging over this stock right now? It's tariffs. So when you look at Nvidia, the stock, phenomenal. It's a juggernaut. It's best in class. Its growth projections continue to be strong. What it made in the last year is almost what it made in the last 10, or its first 10. So we're seeing the growth, but it's not impressing the street, and we're concerned right now, and you see it in price action. As a technician as well, I think Jared did a great job of pointing it out. We are not rallying right now. We're kind of stuck in this level, right. And that call didn't give us that catalyst. So what is the next catalyst? In March when he presents at his annual conference. So we'll see what he says then. But right now, investors are kind of like, all right, this didn't wow us,
sure,
but we're not panicking, we're not getting out, so we're kind of just stabilizing here, waiting on tariff news.
The commentary from UBS out this morning also kind of mirroring what you were mentioning here in the big four U.S. tech firms. They're all forecasted to grow by 35% in terms of some of the CapEx spending that's coming forward there. But that points to something else, which is the solid AI adoption trends. They believe it's going to continue to boost monetization here. How does that play into the fundamentals, and how much of that goes strictly to Nvidia versus the rest of the competitive landscape?
Exactly, and it's a competitive landscape. I think that is the key word. We're starting to see more competition, and then there's concern that this CapEx spending isn't getting the results that people want. They may have to draw down. What does that do to Nvidia's bottom line when their biggest customers are starting to wean back? So that is the cloud that's overhanging it. But when you look at the quarter, when you look at the results, they knocked it out of the park.
Yeah.
But it wasn't this blowout that was going to take us to the next level, because there's still too many concerns, geopolitical concerns, that are weighing over this stock. So when you go back, you look at the technicals, and that story shows that we're kind of in this no man's land. And if we do break down, as Jared pointed out, then you want to watch that 113 level, the lows we got after the DeepSeek news broke and took us down there.
Jay, thanks so much for joining us. Appreciate it. Coming up, everyone, considering buying an iPhone 16e, we're giving you the rundown on what you need to know. That's next. Let's take a look at some of the market action right now as we are just under 2 hours into the trading session. The Dow Jones Industrial Average higher by 0.8%. The S&P 500 flat just barely to the upside, but the NASDAQ, that is lower right now. Some pressure from Nvidia after those earnings report. And then additionally, taking a look at the decline here, it's down by about 0.4%. That is following those fourth quarter results from Nvidia. Joining me now, we've got Robert Pavlik, who is the Dakota Wealth Management Senior Portfolio Manager. You're looking at a variety of factors here, Robert, that are driving the recent volatility we've seen. What are they?
So, I mean, you have inflation. Inflation doesn't seem to be ebbing at all. You have concerns about growth of the overall economy. Retail sales report, the Walmart report, that's concerning people. Tariffs are concerning people. Trump is talking about raising tariffs not only on, China, but Mexico and Canada. He's talking about reciprocal tariffs. I think all those things came together, especially with a market that was trading around, 23 times. And, you had a lot of run up in some of these big momentum, highly traded trader type stocks like AppLovin and Palantir. And I think that all sort of came together at one point and people started to, move to the exit and, selling begets more selling. Is it a problem for the overall economy? I mean, growth is certainly, small. It's being reduced. I mean, we're looking at GDP of 2.3%, something like that. I had been saying, even since I've been on since January, that I thought GDP growth was going to be 2 and 2.5%. It's not the worst. I mean, it was kind of like what we experienced during the Obama administration. We were growing and the market did okay, but you're not just seeing it go gangbusters. You have to sort of really pick your spots in this market.
And so with that in mind, and it sounds like a lot of the economic inputs that you were mentioning can also contribute to what we heard one of our guests from Stifel earlier say, prepare for a wobbly stock market as a result of that. What would you use to describe what type of fluctuations we're expecting to see over the course of this year?
So what worked all sort of last year, probably won't work all this year. You're not going to have all these big Mag 7 type of rallies that are going to carry the overall market.
It's already the long trade right now.
You have to actually do your work and find companies that are good quality names depending on your risk tolerance. If you have a high degree of risk, then maybe, an AppLovin, a Palantir, a Snowflake matches into your portfolio. But if you're like the rest of us, I mean, who, are somewhere between, 5 and 7 on a risk tolerance of 1 to 10, you're probably looking at, names that I've suggested in the past, like Costco, like Google or Alphabet, or like TJX or AJ Gallagher.
Yeah.
I mean, these are good, solid names that are doing really well. And nobody talks about them in the market. Nobody ever talks about AJ Gallagher except when they report. Nobody ever talks about TJ Maxx except when they report. So these are the types of names that I look to put into my portfolio right now.
And so how does that factor into the barbell approach that we're increasingly hearing strategists talk about right now?
So I think you can have some exposure to technology. You don't have to have, these crazy high beta names in your portfolio, but you could put Apple in there. I think Apple is a solid company. It's not growing tremendous amounts. It's not the cheapest stock in the overall universe, but it's a good quality name that I don't think you have to really worry about losing sleep over. You could even sort of expand your horizon and maybe add a little bit of risk to it with like an ANET or even a Broadcom.
Yeah.
But just know what you own. Then I think you have to look towards, what else do I put into the portfolio? A lot of activity has flowed into the healthcare space. Now, look at things like Merck recently. Merck, has been a terrible stock, terrible performer. And all of a sudden, over the last week or two, the stock has spiked up. Everybody's got to own Merck. For what reason? I wonder, and I shake my head at some of those trades. But I think if you look towards, some other names in the healthcare space or even in the consumer discretionary space, you don't have to take on a whole bunch of risk.
How do you identify an exhausted trade? You mentioned AppLovin and brought that to mind here. That was a name that's been up, 400 400% over the past year here, and ultimately it's pulled back quite a bit from some of those highs that we've seen as well. And a lot of people trying to figure out, okay, with that pullback, is the trade fully exhausted at this juncture because of the beta that you were talking about? And how do you kind of use that as your analysis on a wide range of stocks?
So I think the best way to answer that question is to look at the sort of the technicals. Has the stock spiked up well above its 200-day moving average? Is it sort of out of its trading range? Is it does it have an RSI that's completely off the charts? Now, if you're taking a look at those types of stocks, which we saw like 2-3 weeks ago, and you're thinking, well, I can't add this to the portfolio. We're constantly reviewing the names in our holdings, and we're constantly looking for new names or possible better names for the portfolio. So there really wasn't much there to be interested in. But I think if you come back to, again, like a TJX or AJ Gallagher might even be a little bit extended. I wait for a little bit of a pullback, but TJX looks pretty decent too.
Just reported earnings.
Yeah, exactly. And Gallagher just reported like a couple of weeks ago. So again, quality names, nobody talks about them. It's not within these traders, universe that are going to run them all up and then, bail at the slightest bit of concern.
Yeah. Robert, great to have you back.
Thanks for having me. I appreciate it.
Good to speak with you. Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, let's talk a little Teladoc Health. Plunging after reporting a wider than expected loss and disappointing guidance. The company's fourth quarter revenue falling 3% from a year ago. Last month, Teladoc announced plans to acquire preventative care company Catapult Health in an all-cash deal for $65 million here. That deal is expected to close in the next few days. And Virgin Galactic rising after announcing plans for its return to space after a nearly 2-year hiatus. The company says its first space flight with new Delta spaceships is planned for summer of next year, rather. That flight will be carrying research materials before the company plans to begin private astronaut space flights in the fall of next year. Shares higher by about 5.4%, excuse me. Well, it's time now for Tech Support, our weekly look at what's new in the world of smartphones, computers, and more. Apple's new iPhone 16e will be available Friday. The smaller phone comes at a price point just $599, a budget-friendly option there, and our own Dan Howley joins me now to tell us 3 things that you need to know about the iPhone SE here. 16e.
16e, Brad. Get it right or pay the price. That's from...
Not to be confused with the SEs out there.
No.
Yes.
To salute your shorts quote, by the way, for all those old Nickelodeon watchers. This is the iPhone 16e. You can see it right here in my incredibly handsome hands. You'll notice that it does look like the iPhone 14 or older. Looking at that phone that you have there, Brad. It's got on the back one single camera. That's probably the biggest standout that you're going to notice. It doesn't have a wide angle, ultra wide angle, just a wide angle. It does have a kind of optical-like zoom. It's 2x, but it's nothing that's going to, absolutely blow you away. But there are a few things that I think are worth talking about as far as this phone goes, and that includes the fact that it comes with Apple's first C1 modem. The C1 modem is honestly not a life-changing difference for most users. I was running it on my phone. I was getting speeds in my apartment that were faster, frankly, than my home internet on Fios. But I usually get that on my regular phone as well. So, the 16 Pro. So it's an Apple change, but not necessarily a consumer change. Over time, though, Apple says this will get better battery life as a result, and then will allow them to customize designs a little bit more. But for most people, it's not that big of a deal. The other thing is it has Apple's A18 processor. Now, when you would get the older SE, you wouldn't necessarily get the latest processor. You would also get a design that frankly felt outdated. And while this does have the design of the 14, it does feel a little newer. The A18 chip, by the way, also means you get access to Apple Intelligence.
Interesting.
For whatever that's worth right now. I use Apple Intelligence, totally honestly. The summaries are cool. It'll summarize your notifications with people. It'll summarize some news notifications. That's been a little iffy. But I do like the notifications with texting back and forth with folks. That's actually genuinely helpful. The writing tools, not going to use. I'm a writer. I don't want to do that. And I think some of the other tools aren't necessarily huge.
Yeah.
I will point this out, though. Visual intelligence is pretty legit. I've used it because for Valentine's Day, I got my wife a bouquet because I'm the greatest husband on the face of the earth. And my friend had been like, well, just make sure nothing in there is poisonous to cats.
Yeah.
So I used visual intelligence to look up what these little berry guys were. Hold on.
There we go. Okay, we're testing the camera. That's what people buy the phones for. Price point. Is this a good phone at the price point?
$599. It's a decent price point. It's more expensive than the $429 that the original SE was. So you're getting a price bump, but you are getting more storage. You're getting wireless charging. You're getting an improved display. I think this is worth the money if you're an iPhone fan. Let's face it, most people are iPhone or Android. They're not going to go and get an Android phone just because this is a little bit more expensive than the SE. I think this is a great phone for the price. My brother's looking for a phone. I'm going to recommend that he buys it. It's not going to have all the bells and whistles that you would have with the 16 Pro, but it does get the job done for $599.
All right, lightweight too.
It is, right?
All right. You cooked me on my 12 Pro Max, so
sorry.
I guess I got to get into a store and upgrade now. Dan, thanks so much. Appreciate it. Coming up, everyone, we're continuing our look at how to prepare for retirement, plus a change to Social Security that's coming forward. That is next on Wealth. Stick around. The Social Security Administration has a lot of big moves coming your way here. But first, as we think about what those changes are that are coming your way, we want to pivot and talk about retirement here, especially as we consider how every generation is preparing itself for retirement right now. We're going to take a quick look at the major averages here. We've got those on your screen as we're just about 2 hours into the trading session. And the Dow right now is up by about 0.9%. The S&P 500 is up 0.1%. And the NASDAQ, we're taking a look at that, holding on to some slight moves higher here. Actually, that's looking like it's down. Our arrow is just pointing the wrong way. That's down by about 0.4%. All week long on Wealth, we've been covering investing for retirement at every age from the beginning to the end of your career. Today, we're breaking down the mid-60s, the time when most people start thinking seriously about leaving the workforce. The so-called silver tsunami is underway with a record number of Americans turning 65 this year. 4.18 million seniors are expected to hit that milestone in 2025. Joining me now with some advice for the incoming wave of new retirees, we've got Rita Assaf, who is the Fidelity Investments Vice President of Retirement Offerings. Great to have you here with us, Rita. So first and foremost, let's talk about this silver tsunami. What are some of the figures and how many people are we anticipating will be a part of this so-called tsunami?
Well, I think as you just noted, we're hitting sort of the peak number of those turning age 65 right now, which will continue to through 2027. And what we know is that by 2030, almost all baby boomers, I think all 71 million, will be over the age of 65. So it is definitely a tsunami, and it's coming very quickly.
And so as you think about how much you should have saved by your 60s, what is kind of the good, and I know the number is different for everybody, but perhaps what is a good barometer that you're seeing be more widely used among this age cohort?
Yeah, the number does vary. Everyone wants a number. What's my number? And it really does depend on your personal needs and what you plan to do in retirement. But ideally, what we say is that you should be able to replace, with your savings, about 45% of your pre-retirement income. And you want to try to withdraw no more than 4.5% of your savings each year. Now, this could be adjusted up or down depending on when you retire, if you retire earlier, if you retire later. But that's the general guideline. And
so if you're in your mid-60s, what's your checklist for retirement to make sure you're ready?
Well, now that you're that close to retiring, you really need to get to brass tacks. So first, I would say identify your personal financial goals and create that detailed retirement income plan. You want to determine if you have enough money to last throughout your retirement. So example, where do you want to live? What will you be doing? This will help you identify those expenses that are essential and non-essential. And ideally, you want to have essential expenses covered by guaranteed income sources, such as Social Security or annuities, because these keep up with inflation. And then discretionary expenses should be covered by either your savings or investment income. So that way, say there is a market downturn, you can cut back without hurting your day-to-day. Second, take a look at your Social Security and your claiming strategy. That is one piece that's key. We know that if you wait to delay to claim, you can actually get more, your monthly payment can increase. So you want to understand that, and then how your portfolio is allocated towards emergency savings, income protection, and growth. Third, you want to implement that plan with an appropriate mix of what those investments will look like in each bucket. And then lastly, you'll want to continue to review it. For some, retirement is lasting upwards of 30 years. So we know things can change, whether it's in the market or your personal goals. And that's where it's important to continue to revisit your plan.
And so all of this in mind, how should you be shifting your investments when you are in these years and really kind of getting down to brass tacks with your retirement planning?
Well, it's easy to say you're probably less aggressive as you head towards closer to retirement. And we know that retirees are often looking at trying to become conservative with their short-term investments during this time. And that is tempting, but you don't want to get too far down, too conservative or too aggressive, because given that retirement may last longer with longevity and healthcare innovation out there, you might need to actually build in some growth potential. So you'll need a balanced portfolio that keeps in mind some short-term investments that you can use for your day-to-day living, but then some growth potential that can help you. So for conservative investments, you'll want to really look at anything with a fixed return, such as a CD or annuity, and then anchor that with some growth investments that can withheld and grow with inflation if that actually occurs.
Okay, and while we have you here, required minimum distributions, known as RMDs here, what do we need to know about this?
Well, as you save in those tax-deferred pre-tax and retirement savings, at some point you do actually have to take that money out through what we call required minimum distribution, which right now is at the age of 73. That will increase per Secure 2.0 in 2033 to age 75. So the deadline for taking RMDs is generally December 31st, although in the year that your first year that you take RMDs, you can actually delay that to your second year. But this is where, when you're taking RMDs, you really need to consider your tax liability and how that impacts things, because there is a tax impact to RMDs, and it does create, RMDs are treated as taxable income, which can have a domino effect depending on what that means to both your Medicare premiums and other factors that you have from other incomes. So you want to just be careful of how those RMDs factor into your tax strategy.
Really great breakdown. Rita, thank you.
Thank you for having me.
The number of retirement account millionaires surged last year, according to the new data out from Fidelity. With more details on what drove these gains, we've got the senior columnist here at Yahoo Finance, Carrie Hannon. Carrie, what do we need to know?
Hey, Brad. Yep, great news for millionaires. It jumped. Fidelity's numbers showed that last year, a 27% jump in millionaires who are 401k millionaires. This is, great news on many levels, and we can explain it because, oh my goodness, we had a pretty robust economy last year. Inflation was easing, the interest rates dipped down, the Fed cut those rates, the S&P was up something like 23%. So there was a strong market behind these numbers. And what we found is that, or what Fidelity found, was 4 in 10 of these millionaires are boomers. 57% of them were Gen X, and 2% were millennials. And the reason why boomers weren't number one is because they've already started to pull some money from these retirement accounts to use in retirement. But Brad, you got to understand, the reason why these folks have become millionaires is, yes, we had a great year last year, but they have been saving on average for 26 years. And they have put in an average of 18% contributing every year. So that's 18% pre-tax, and that combines employer and employee contributions. That's a lot. And so it's steady, consistent. It's a long-term game. If you want to become a 401k millionaire, you got to be in it for the long haul, be consistent, and keep contributing. And that will make all the difference in the shaky markets. When the markets get volatile as well, you stay the course.
And so, Carrie, there are some people out there who might be getting a bit worried that they don't have $1 million in that 401k. What's the average balance in those retirement accounts? We've got a couple seconds here.
Oh, shoot, 131,000 roughly for 401ks, 127,000 roughly for IRAs. But, Gen X has, 590,000 roughly. So those are average numbers. And you got to remember, people are ticked up. They actually did start contributing more last year, 14.1%. So it's still below the 15% most advisors tell people to set aside pre-tax, but it's getting better.
Carrie, thanks so much for taking the time and breaking this down.
Thanks, Fred.
Coming up, as President Trump threatens to impose tariffs on China, Canada, Mexico, and more, how could that impact the goods that you buy every day? I talked to the CEO of The Honest Company about that and much more next on Wealth. Consumer goods brand The Honest Company beating expectations in its fourth quarter and reaching a record annual revenue of $378 million in 2024. That's up 10% year over year, and the company issuing guidance that it says takes into account the potential risks of tariffs. Investors are eyeing the impact these policies could have on consumer names and pricing for customers. Joining me now on this, we've got Carla Vernón, who is the CEO of The Honest Company. Carla, great to have you back on the program with us, and thanks for taking the time here. As we're just monitoring the stock reaction to the earnings, just got to ask, even as you're looking out into the future, of course, investors focused on what's going to happen in the future for the company. How are you really factoring in the impact of some of the potential policy decisions that could come forward?
Thank you so much, Brad. It's really great to be here with you this morning, and I have been enjoying this series that you are doing on Yahoo Finance, so thanks for having me. We reported our earnings yesterday from The Honest Company, and across the board, we did beat expectations and beat consensus. I'm very proud of the record revenue results and the margin expansion that people are seeing from The Honest Company. As we gave our outlook, we did reflect what we knew and what we were able to plan for in tariffs. And I would say overall, our expectations for The Honest Company remain strong and confident. We indicated that we have our long-range model set to grow at 4 to 6% on the top line and margin expansion on the bottom line. And that remains our point of view. We're very confident about our ability to do that.
I wonder what you're hearing from your retail partners right now in the pulse check of the consumer, especially as it relates to all of the items that make their way into shelves at some of those largest wholesaler purchasers that you work with.
We have such strong relationships with our retail partners. The Honest Company plays such a strong role both in brick and mortar stores and online because we really attract a very new and important demographic to the aisles that we play in. So many people might not be aware, but Honest Company makes clean, designed personal care items that are designed for babies. And now we've expanded into families of all sizes and all ages with products across the board from diapers and baby wipes to personal care for adults, including gorgeous skincare products. And when we talk to our retailers, what we're finding is that they value what Honest brings by attracting that upper income household to the categories. And they see that we are driving growth in the categories where we play. In fact, across the board at our top retailers, whether that's Amazon, Target, Walmart, we've seen growth in consumption across all of 2024 and even our fourth quarter results.
Carla, while we have you, tomorrow is a critical event for retail as well here, as we know that Target, in some of the backlash to rolling back their diversity and equity and inclusion initiatives, there are customers that are saying they are going to black out basically their purchases from some of the retail organizations that have made these decisions. We know that you have partnerships with stores like Target. How do you kind of monitor when there are major events where consumers, as Marcus Collins told us yesterday, have more empowering agency with their dollars to make sure that you're still kind of monitoring what's playing out with the consumer and how that agency also flows through to aisles that you're in as well?
The Honest Company was founded by 4 founders who themselves were diverse, including a Latina founder, an Asian founder. I myself am an Afro-Latina female CEO. So at The Honest Company, the importance of including everybody who might want and need our products is just absolutely woven into our DNA. I was trained at one of the world's greatest and biggest CPG companies. And one of the things I learned when I grew up inside of General Mills and when I was running the everyday essentials business at Amazon is that demographics are destiny. And consumer products companies need to have a big, wide open tent to attract everyone. To do that, we have to have products that earn that trust. That's what we focus on at Honest. We have products that have a very high standard of clean. We call it the Honest Standard. And there are 3,500 ingredients we do not use or allow in our products because we want people to know these products are different on this shelf. They are high quality, they are effective, and they are good for everyone. I love when I see the 5-star ratings across the board for our products. That means we are actually satisfying people across the board. And our retailers look for us to do that, to bring everyone into the aisle and drive those sales.
Carla, just lastly, while we have you, I only have about 30 seconds here, but I love the history, the work history, the experience you bring to the Honest Company, just the leadership lessons, and you sent some leadership lessons to our team, especially as we're considering this critical moment for diverse voices and positions leading large businesses, publicly traded like the Honest Company.
Listen, my message to all of my employees and everyone right now is do a personal inventory. Make sure every day you are making space for gratitude, for joy, and for rest, because that will serve you in these times and in any times.
Carla, thanks so much for taking the time here out of your busy schedule. Really appreciate it as always.
Thank you, Brad.
The rollback of diversity, equity, and inclusion programs, or DEI, have affected a number of media companies, including Disney and Paramount. This means big decisions from many more corporate executives approaching this at a critical moment in media. Joining me now on set to discuss is Deborah Lee, the former CEO of BET Networks and author of the book, I Am Deborah Lee. Deborah, great to have you here in studio with us.
Thank you, Brad. Thank you so much for having me.
Absolutely. Let's start exactly on the point that we were making on the way in, talking about some of the rollbacks that we're seeing in media at large. What would you, if you had the ear of some of these executives, because I know that you've already worked with or at least been in the same room with many of them over the years, what advice would you be giving them in navigating this critical moment?
To the executives that work at these companies now? Well, I think I would first say that they should dig deep inside themselves and figure out what their values are and why they joined the company they joined. I have always been a big proponent of diversity, inclusion, or opportunity, whichever you want to call it these days. It was very important to me growing up. I had opportunities I may not have had otherwise, but I excelled and I was able to run a company, BET Networks, for 13 years that was probably like 95% diverse. A lot of people came to BET because it provided uplifting programming to the Black community.
Absolutely.
All that said, I firmly believe that you should be comfortable where you work and your values should align with your company's values. I have been very fortunate to have a long career at BET, but also to serve on many different corporate boards. They're all doing some soul searching right now and saying, where do we go from here? And I'm happy to say most of the companies I know and are affiliated with have said, we believe in our values and we're going to stick to our values, no matter what the political winds of the year or these 4 years are. So I'm happy to see that, and I would encourage executives to ask their CEOs, to ask their board members what they believe in. Absolutely. And I'm a little saddened to see the companies that are rolling back. I hope they're not really rolling back, hoping there may be changing language or changing structures, but it's important, as Carla said, for companies companies to know who their consumers are, in the media space to know who their viewers are, and to try to cast that net as wide as possible and say, we want to give opportunities to all, and we want to deliver products to all, and in the media space, we want everyone to watch.
You had a major position in media, a ton of influence for years here. What advice would you give to young professionals, especially women and people of color, who aspire to lead organizations in media or entertainment?
Yeah, that's a great question, and that's one of the reasons I wrote my book 2 years ago. It'll be out in paperback next week.
Congratulations.
Thank you. And I wrote it because I looked around and I didn't see a lot of female executives, or very few female and hardly any black female executives that were CEOs. The numbers are still really low. And I said, I want to explain and detail my journey so that hopefully young people can learn from it. Young people, men and women, can realize they can be CEOs, there is the path, and that they have the opportunities to do and impact companies. So I would encourage young people to become well educated. That's the first step. My dad always told me that. I was born during the year of Brown versus Board of Education, so I had opportunities that the generation behind me did not have. I went to the best schools I have, best schools I could. So going to get your education is paramount, and then try to discover where you want to be, what industry, what kind of company, and if it doesn't work out, you can make another decision. But when you're there, if the COO, CEO, or the C-suite is on your radar, try to broaden your experience. Don't just be a lawyer who understands programming or understands marketing. That was my path to CEO. I went in as a lawyer. I kept picking up more business-related assignments, and I became COO, and then I became CEO, a path that I never envisioned for myself.
Everyone has to carve their own path along the way.
And it worked.
And it worked, indeed.
And I think it will work for others. That's why I want them to know about it. And DEI and all the restructuring in the media space, the competition between streaming and cable and broadcast shouldn't deter people. They should learn all the new technology and keep pushing for what they believe in.
Deborah, thank you so much for taking the time here with us in studio today. Great pleasure to have you in.
Great to be here. Thank you.
Coming up, everyone, wedding season is on the way, and with it, a big bill for many couples. We discuss next on Wealth. Wedding season is just around the corner, and for many couples, their wedding day could be one of the most expensive events in their lifetime. The average wedding costs, get this, about $33,000 in 2024. That is down a touch from the year prior, according to the wedding planning platform known as The Knot. As couples begin planning for 2025, 85% of them say that the economy will likely impact their plans or decision making. And some are even turning to the micro wedding trend to save some money. Joining me now, we've got Raina Moskowitz, who is the CEO of The Knot Worldwide. Great to have you here in studio. I mean, I've visited the websites of The Knot all the time. Too many weddings that we've gotten invites to, but for good reason as well.
Yeah, good reason.
Yeah, so great to have you here in studio. Let's talk about this. What trends right now are you seeing impact the costs of weddings? And it's not all inflation alone, is it?
No, sure. So first, thank you so much for having me. I joined as the CEO of The Knot Worldwide just over a month ago. And it has been really exciting to see the trends that are happening in this space. And so weddings are a big business and they're resilient. So despite inflation or economic pressure, we see that couples are really continuing to prioritize the big day and celebration. And so, yes, on average, weddings are quite expensive. We introduced a budget advisor tool last year as a way to help ground couples. And what I'll say influences the cost of a wedding geography, so where you get married. So, averages are a little deceiving, so it depends where in the US, as an example, you're getting married. Sure. In some places, the average might be 20, in some places in New York, New Jersey, closer to 70 and above. Ooh. And so that geography is a big factor. Mm-hmm. Also, guest count is a big factor. And so a lot of the decisions you make in planning the big day are variable costs that depend on guest count. But what we see is that on average, couples have 116 guests at their wedding, and that is holding strong. So despite pressure on budgets or wallets, we see that weddings are resilient.
And so with this in mind, how are couples alleviating costs right now? What are some of your top tips to cut down on costs here and there that could have a big impact for your experience?
Yeah, so on our platform at The Knot, we have nearly 900,000 vendors to choose from. And so we have vendors that serve couples based on whatever their style, whatever their budget. And what we see is that while couples are very mindful of their budget, on average, they continue to engage with 14 vendors. So they're not cutting out any element of their wedding. Again, guest count is a good lever to be mindful of, and also working with your vendors. So vendors have so much knowledge. So, if you're in love with a certain flower, as an example, and it's expensive, you can work with a vendor to find, something that's a good replacement for it. So vendors have so much knowledge, and it's really helpful for couples to lean on their vendor to make choices that fit within their budget.
I got to hustle to my finish here. I got 30 seconds. Outlook for 2025 in weddings.
Yeah, weddings are shining bright. So despite any headwinds, weddings are resilient, and Gen Z is all in on weddings too. And so we're excited about that data that shows that Gen Z continues to envision weddings in their future.
Interesting. Okay. All right. We're going to continue to track all these trends and much, much more. Raina, thanks so much for taking the time here with us.
Thank you so much. It's great to be here.
Absolutely. That's it for Wealth, everyone. Let's take a quick look at the markets here with the time that we do have left. Checking in on the Dow, the S&P 500 and the NASDAQ. We're mixed right now. The S&P 500 down by about 0.25%. NASDAQ has continued to slip off of that Nvidia earnings report. That's down 0.8% right now. And you've got the Dow Jones Industrial Average. That is holding on to some gains. It's up fractionally by about 0.5%. That does it for our show. I'm Brad Smith. Thank you for watching. You can stay tuned for Market Domination. That comes up 3 p.m. Eastern Time. Julie Hyman, Josh Lipton, they'll count you down to and through the closing bell.